Hi, you're watching this NDTV YouTube live right here on our YouTube platforms. My name is Sanket Upadhyay and with me is Himanshu Mishra, my colleague who is also popularly known within NDTV as Professor Himanshu because he believes in explaining things well. So, Himanshu, the issue that we are talking about today, Himanshu and I have spoken in the past a lot about the state of the economy, what's on the mind of the government, the various schemes and initiatives that the government has launched, particularly the lowering of the corporate tax rates. What does it mean? Industry heads talking about income tax rates coming down. What does that mean? Here's the thing. Today we are going to talk about something very interesting. SBI, the largest bank of this country, State Bank of India, has taken a crucial decision. Now, what is that decision? Before I get to that decision, let me give you a conclusion. The conclusion is, many people feel, is it even safe anymore? Or is it feasible, not safe, feasible to keep your money in a bank? Now, why are people saying this? They're saying this because only today the SBI, the State Bank of India, announced the lowering of their interest rates. Now, this is the rate of interest which they give to you if you have put your money in their bank, in the various savings bank accounts and other bank accounts. So the interest on balances up to 1 lakh rupees in SBI is at 3.25%, and if it is more than 1 lakh, it will be at 3%. Now, given the fact that inflation, according to the RBI's, that is the Reserve Bank of India's forecast, is at 3.5%, 3.5%, that in a way negates the interest that you earn from a bank. In effect, Himanshu, it means that you're not earning money. In fact, you're losing money in a bank. So what is the grand thought behind this? Because, the people are going to ask this question, why should I then keep money in the bank if I'm not earning?
Right. It reminds me of a very interesting aspect of my life. I remember a senior economist once told me that if the inflation rate in the economy is 10%, and if you have been given a 10% increment, it essentially means you have got no increment. So I asked him why. He said because the 100 rupees that you were earning last year, is now 110 rupees in terms of value. And so the company has just compensated you for the increase in inflation. So you have got actually zero increment. You've just been compensated for the loss that you have incurred because the value of 100 rupees last year is 110 rupees this year. Now, this reminds me of the figure that you're saying. Essentially is that if the inflation is more, as RBI has projected,
then you're losing money, not earning.
And interest rate is less. It essentially means that the money that is there in my bank account today, the value of it after 1 year would be lower than what it is today because the inflation is much higher. Because I have to spend more money to buy the same set of things that I can afford this year.
Yeah.
And the thinking here is, I think, largely is to discourage people to keep money, hold the money, and rather take the money out and start spending, because that is the larger focus of banks, I think, now, and also of the government of finance ministry, that to increase the momentum in the economy, to address the slowdown concerns, it is very important that the spending is increased, because when the spending is increased in the market, it creates new demand.
So you're saying that this is a sort of a disincentive to keep money in the bank.
That's right. The idea is that more people need to spend money in the market. Because it's only when people start spending market, Finance Minister has gone on record saying that
is when the economy starts moving.
She expects that this festive season is a very important opportunity for the government to give a spurt to spending by both public and government agencies. And so if everyone spends more in the economy, it creates more demand. If there is more demand, then the industry also is able to sell more goods than they normally would have done. And so that creates the momentum that is required. And that is why we have seen in last couple of months, government taking a series of decisions to first cut the corporate tax rate. 1,45,000 crore of revenue was foregone by the finance ministry. The idea was that this 1,45,000 crore will be with the industry now, because they will be paying less of corporate tax, and that a part of it can then come in the market. Then
assuming it comes in the market, because then there is a criticism that perhaps these big corporate houses may also want to just hold on to this money and not spend it.
So that was largely seen. People are saying they're questioning this move now, how much effective that will be. But the thinking was that this was a kind of an incentive. Somebody told me it's a kind of a stimulus package actually to the industry to come out and invest, because the industry has been complaining for last many months. I have interviewed many captains of the industry, and their one single demand from the government has been that we are not getting the funds that we want to invest in the economy because banks are hesitating in giving funds. And the hangover of the NPA crisis is largely seen as the main bottleneck why banks are hesitating. Now, some of the bankers would tell you that RBI has made stringent guidelines for lending because of the NPA crisis, and they also have a fear that if this crisis has to be avoided and averted, then it's better that you have stringent guidelines. But the other impact of that, fallout of that has
nobody's taking loans.
That the industry is finding it difficult to take loans, and even the automobile sector, the car companies are also complaining that because the NBFCs are not getting the funds that they should have got from the banking sector, so their ability to actually pass on the lending, that is the demand in the rural areas, for example, is not very good. And that is one of the reasons why people are finding it difficult to buy cars, because the loans are coming with lots of conditions, and these conditionalities needs to be streamlined and rationalized so that people can easily access funds from the bank and then they can go and invest. So here also the idea is that if you have money in the bank, you're going to lose your money in next 1 year.
So get out and spend it.
So the idea is that to encourage people.
Do you think this is going to work?
Difficult question. But I'm saying that at the moment we can think that this is what perhaps SBI...
No, because the reason why I'm asking you this question is because naturally there will be a follow-up with other banks also reducing their interest rates. So then in that case, it becomes a natural question to ask, do you think people will spend money? Because see, if I'm not earning good interest, where do I spend it on?
See, the idea is that the timing is very important. The festival season is getting in at its peak now. So the idea is this is the time when most of the Indians spend lots of money on consumer goods, on so many things, on renovating their houses in Diwali, for example. And Diwali has always been seen as a golden opportunity by the market, by the industry to spurt the demand. And that is when people, when they save money the whole year, this is the time when they spend the money in the market. So the idea is that this is the time when, if you give a fillip to this trend, the
sort
conventional
of a
springboard effect largely, that people are more encouraged to take out money and spend in the market. But the larger question is, of course, the other aspect we have seen that people tend to save money. In the case of industry also, you were saying that the idea is that if this slowdown continues for a longer period, how does it affect my life? Now, I know personally people who want to buy new cars, but they seem to be hesitating.
Including yourself.
Including myself.
You drive a 14-year-old car.
Yeah, I know. But of course, I think that this is a part of the social discourse. But a friend of mine has bought a new car, XUV 300, only yesterday. So it's that my friends have started, they are of course spending. But the larger trend at the moment is not what government would have liked. The larger trend, if you see, these are individual cases, me and my friend, but at the larger level, that slowdown is largely seen in the sales figures of Maruti, for example, or big car companies.
The 8th straight month of a slowdown in Maruti.
And that trend has continued, unfortunately, even in the festive season. See the last month's figures, for example, of across the board segment, there is a slowdown. So whether I want to buy or I do not want to buy is not important. At the larger level, the decline is significant. 25%, 30% decline in sales means that if 3 cars were sold at this time last year, only 2 is being sold this year. So at the larger level, at the national level, the trends are disturbing. And so that is why... But
these are early trends.
early trends. But at the same time, government is optimistic. I interviewed Vice Chairman of Niti Aayog on the day when RBI released the monetary policy, and there was concern when RBI downgrades its growth forecast for 2019-2020 from 6.9% to 6.1%. There was concern, but at the same time, Niti Aayog Vice Chairman said that RBI is being too cautious, and the government, his own estimate was that Niti Aayog believes that growth rate will be 6.5%, around 6.5%, and he believes that the revival will start somewhere in the third or the fourth quarter. But that will depend largely also on where the global economy is going, because we have reported on this very extensively that UNCTAD report released by UN for 2020 did say that recession, there is a fear that recession might seep in in next year. So the global slowdown is expected to fall from 3% to 2.3%, the global GDP growth rate. So we are moving into a global economy which is slowing down. And that, of course, will pull affect our exports also, because the demand is rising. We have seen series of reports.
So the point, Himanshu, thank you so much for joining us on this brief chat. But it seems that as of this moment, steps are being taken by the government, but these steps are not going to be enough, and we can expect more steps, perhaps a dip in the income tax rates, which is going to be...
Niti Aayog Vice Chairman, I asked him this question, that Adi Godrej, Vikram Kirloskar, they're all demanding that if income tax rates are reduced, that people will have more money in their hand to spend. And he said that I'm totally confident that government is thinking about this, but beyond the point we cannot say. But he did indicate that this was an option in which thinking is on in the government.
Okay, so in this direction, thinking is on. So maybe the government may bring about this good news. But as of this moment, you may have to think twice about the fate of your money in your bank account, because effectively the earnings that you get from keeping your money in the bank are nil, and in some cases even negative. That's a wrap in this edition of NDTV's YouTube Live, but we'll get in touch, be with you with another issue, with something else, in an informal way, discuss what we think is a good way of understanding complex issues right here on this platform. Till then, goodbye.